The problem with brutal dictators like Chinese President Xi Jinping is that they often behave like madmen. They want to do what they want, and this lack of self control often ends up doing more harm than good to the countries that they lead. Take the Chinese economy, for example. It is the second biggest economy in the world, but Xi's reckless and populist decisions are pushing it towards a historic crash. Xi Jinping has now woken up to the harsh economic realities of his country. He is in damage control mode and is trying to improve the increasingly negative sentiment surrounding the Chinese economy, but it may be too little, too late. Hi and welcome to TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I'm your host Shubhangi, and in this video, I will tell you how Jinping has pressed the panic button in the backdrop of a dipping Chinese economy. Let's begin. As the Chinese market tumbles, President Xi Jinping has suddenly woken up to the harsh economic realities facing his country, and he has pressed the panic button. We see Chinese authorities led by Xi Jinping take some specific actions to revive the Chinese economy and the stock markets. With the benefit of hindsight, it is Xi Jinping himself who has landed China in a desperate position with his own actions, like cracking down on tech giants and entrepreneurs like Alibaba founder Jack Ma and wiping out over $800 billion worth of combined market value of Chinese tech giants, cracking down on edutech enterprises and literally reducing billionaires into millionaires, mishandling the COVID-19 pandemic and forcing Chinese ports to be choked, failing to stop India's resilient stock market from tapping into the disenchanted foreign investments exiting out of China. China presses the panic button. With India's stock market emerging as the best performing one across all major stock markets in the world, China is losing foreign portfolio investors to India. Now, Chinese financial authorities are realizing how things are going south for them. So, they are doing what they do best: blame the United States of America. Fang Xinhai, Deputy Chairman of the China Securities Regulatory Commission, called for enhanced monitoring of cross-border money flows to stabilize the capital markets. He said, "It is normal for some foreign investors to relocate their assets considering the changes to international monetary policies. This won't lead to big inflows or outflows. However, we must prevent some foreign-funded institutions from facilitating market changes with their investment decisions. This is where we must pay particular attention." Xi announces plans to set up Chinese mainland's third stock exchange. Xi Jinping is trying to mitigate the negative investor sentiment and stock market troubles triggered by his tight regulatory measures and crackdowns on big enterprises. In order to do so, he has tried to make a big bang announcement: plans to set up a third stock exchange in the Chinese mainland. Speaking at the China International Fair for Trade and Services last week, Xi Jinping also claimed that the establishment of free trade zones in China could help the global economic recovery. This is a part of Xi Jinping's attempts to placate the wounded foreign investor sentiment following the rise in China's hawkish behavior. The Chinese president said, "Service trade is an important area for international economic and trade cooperation. It plays an important role in China's new development strategy." While Xi Jinping did not explain the purpose of a third stock exchange, the China Securities Regulatory Commission has clarified that it would be inclusive and targeted and will serve innovative small and medium-sized enterprises. So, Xi's strategy is clear. Big corporate giants have been hit hard by crackdowns, and therefore smaller enterprises are to be encouraged. He wants to keep imposing tight regulatory measures while improving the stock market sentiment with the aid of smaller enterprises. Reassuring the tech sector. The ongoing carnage in the Chinese stock market and growing disenchantment can be traced back to Xi Jinping's brainless crackdowns on the tech sector. So, Beijing is trying to reassure the tech sector now. On Monday, both Chinese President Xi Jinping and his top economic advisor, Vice Premier Liu He, tried to reassure China's private tech companies. Liu said, "There are no changes in the principles and policies for supporting the development of the private economy. They have not changed now and will not change in the future." Chinese President Xi Jinping signaled support for the tech sector by sending a congratulatory letter to the International Research Center of Sustainable Development for Big Data. The letter appreciated the tech and innovation organizations, which launched a forum on big data and sustainable development goals on Monday. Chinese President Xi Jinping has devastated China's economy, and the Chinese stock market is tumbling uncontrollably as a reaction to his brainless crackdowns and other bizarre regulatory policies. Now, he is seemingly trying to mitigate the ominous crisis facing the Chinese economy with some big bang moves that make more noise but carry less substance.